Gentleman from North Carolina, Mr. Cawthorn, for 5 minutes.
Madam Speaker, what do you call a group of unelected, unethical, power-hungry bureaucrats making policy decisions? In many countries, we would call them an oligarchy. In the United States, though, we call them the Federal Reserve. Which is funny because the Federal Reserve has no reserves and they're absolutely not part of the federal government. For decades now, the Federal Reserve has diluted the purchasing power of the US dollar, decimated private industry, and divvied up the hard-won earnings of US citizens amongst corrupt power brokers in Washington and Wall Street. Let me be clear. Inflation is at its root a monetary fraud, and the Federal Reserve is the biggest counterfeiting operation in American history.
The US dollar and the global financial system is based on one thing: trust. More specifically, trust in the decision-making of the USA's central bank, the Federal Reserve. Those that know what the Fed does either think they're saving the economy, destroying it, and there's also that group that associates it with conspiracy theories. In order to understand why we have so much trust and reliance on these central banks, and specifically the Fed, we have to understand why central banking exists in the first place. The Revolutionary War. This is when the 13 colonies of North America fought for their independence. Why? Because Britain was deep in debt. So the British Parliament imposed taxes on American colonists to pay off those debts. The Revolutionary War started with the Boston Tea Party, where American colonists dumped 342 chests of tea imported by the British East India Company. This was a tax revolt against the Bank of England. But in order to earn their freedom, America needed to fight a war against the establishment. And in order to fight a war, they needed money. So the Continental Congress issued a new currency called the Continental to fight the war. Not only was this currency printed into oblivion, causing a massive hyperinflation, it was also heavily counterfeited by the British. After the war, the young United States was in trouble, struggling under the weight of its own broken financial system. Enter Robert Morris, the superintendent of finance at the time, who had ironically been investigated for war profiteering 2 years earlier. Morris came along to Congress and pitched the creation of a privately owned central bank, awfully similar in structure to the Bank of England, in which the colonies were at war against. So Robert Morris establishes the Bank of North America and loans $1.2 million to the government. Very similar to the beginning of the Bank of England, which loaned $1.2 million to its own government after its charter. So then, what's the problem here, you might ask? If the government needs money, isn't a loan a good thing? The problem lies in how these loans function. There are two main components that engage in this loaning practice: a central government that collects taxes and spends on goods and services, like social programs, public works, and war, and a central bank that controls the money supply and credit in the economy by buying financial assets and influencing interest rates. A key word here is credit, because it is the sole reason the system is dysfunctional and fraudulent. First, let's understand what it would be like to live in an economy without credit. In this hypothetical economy, the only way to produce income is to exchange money for productivity. For example, working a job or creating a business with a valuable service. This is how income would be produced if credit wasn't an economic factor. But since credit exists, lenders and borrowers can now also engage in transactions, just like buyers and sellers. The biggest borrower in the economy is our government, and the biggest lender is the central bank. So when the Bank of North America lent $1.2 million to Congress, there was a promise to repay the principal, the original amount owed, and interest, an additional amount because the money was borrowed. Credit, or currency in this case, is lent to the government from the central bank. This boosts the economy by increasing consumer spending, but also the prices of assets such as stocks and real estate. People become more creditworthy because more money is circulating in the economy, and their own assets such as their house or stocks are worth more. The more creditworthy people become, the more they end up borrowing and spending. And if there's more spending, that ultimately means that people are earning more than they're supposed to. People having higher income also makes lenders like banks more willing to extend credit, creating a cycle of increased borrowing and spending, leading to economic growth. However, this cycle eventually reverses itself. This is because credit assumes a different name after time passes: debt. So we end up consuming a lot more income than we produce at first, and are forced to consume less than we produce when it's time to pay it all back. The reason cycles like economic booms, followed by recessions, happen is because the currency created isn't earned through productivity. It's created through acquiring debt from the central bank. This wasn't a massive issue with the Bank of North America, because Robert Morris eventually fell out of politics. So the Bank of North America became a regular commercial bank. But that's not where this ends. It's 1816. President Madison signs the charter for another central bank, the second bank of the United States. This is because there was stagnation in trade and inflation was on the rise again. The first United States bank was actually created by Alexander Hamilton. Both United States banks, although different from the Bank of North America, had very similar interests. Hamilton also has a famous quote: "A national debt, if not excessive, will be to us a national blessing." Quite ironic, considering the first bank of the United States left the nation in massive debt, leading to the creation of the second one. This new second bank, chartered by President Madison, was also mostly privately owned and was federally authorized to create debt-based currency out of thin air, much like the Bank of North America and the Bank of England. However, when the second U.S. bank charter neared renewal, President Andrew Jackson vetoed it, famously stating, "If people understood the rank injustice of our money and banking system, there would be a revolution by tomorrow morning." The public was beyond ecstatic. By 1835, Jackson actually succeeded in paying off the national debt, and in 1836, the bank's charter expired, making it obsolete. However, in the late 19th century, a new development arose. A new group of industrial magnates accumulated immense wealth and power by monopolizing emerging industries. All of them consolidated their massive fortunes and formed a network of financial interests and institutions largely centered around one man: J.P. Morgan. Morgan was notorious for his methods of centralization. For example, he bought up many small railroad companies and consolidated them into a monster conglomerate, the Vanderbilts, a method people began to call Morganization. Morgan used clever strategies to fund and facilitate the launch of nearly every successful corporation of his time, including AT&T, General Electric, General Motors, and DuPont. His power was immense, and yet, he noticed a problem in the financial system. During the early 20th century, banks would issue their own currencies, the problem being that a note or currency that was good in one state was useless in others. The whole financial system was effectively built on a house of cards, but Morgan saw this as an opportunity. One of Morgan's biggest competitors at the time was the Knickerbocker Trust Company. It was also one of the biggest financial institutions at the time. But the Knickerbocker Empire was built on speculative investments, coupled with a lack of regulation on banks by the US Treasury, allowing them to issue loans without sufficient reserves. Eventually, the public found out. One bank got squeezed, then failed, then another, and another. The public scrambled to get whatever they could salvage of their remaining wealth. This was a panic. The Panic of 1907. J.P. Morgan positions himself as a hero, offering to underwrite the debt of the faltering banks and financial institutions. But the damage was done. The public was sick of the instability in the financial system. They knew that changes were needed, and Morgan was planning the Morganization of the entire banking industry. So a congressional committee led by Senator Nelson Aldrich was created to investigate the economy. The consensus became that a central bank would help prevent bank runs and create a system that was easier to regulate on a national level. However, the bureaucrats responsible for creating the central bank aimed to protect their own interests. On November 22, 1910, with his newfound discoveries, Senator Aldrich left New Jersey on a train in complete secrecy alongside 6 other key figures, including representatives from J.P. Morgan and Company. This meeting had to remain secret. They used fake names and kept their identities hidden. Frank A. Vanderflip, president of the National City Bank of New York, admitted later in the Saturday Evening Post, if it were to be exposed publicly that our particular group had got together and written a banking bill, that bill would have no chance whatsoever of passage by Congress. The group met at the notorious Jekyll Island Hotel, where they conspired to create a monopoly on the entire American economy. And then, it happened. On the evening of December 23, 1913, when most congressmen had already left for the Christmas holidays, President Woodrow Wilson pushed the Federal Reserve Act through an almost empty Senate. As a matter of fact, President Wilson actually admitted, "I have unwittingly ruined my country. A great industrial nation is controlled by its system of credit. The growth of the nation, therefore, and all our activities are in the hands of a few men. No longer a government by free opinion, no longer a government by conviction and vote of the majority, but a government by the opinion and direction of a small group of dominant men." The bill was finally approved, leading to the creation of the IRS and the Federal Reserve. The Fed now had the exclusive authority to print America's money.
Hi, I'm Buck, your personal tour guide to the Federal Reserve. I'm here to introduce you to one of the most complex but effective institutions in the United States. But don't worry, I'll explain it all in plain English.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
One of the mandates of the Fed is bringing stability to the economy. Yet, ironically, it created one of the biggest bubble bursts in U.S. history in 1929, leading to the Great Depression. Fed Chairman Ben Bernanke even stated, "Regarding the Great Depression, you're right, we did it. We're very sorry." The Great Depression was followed by the Great Inflation in the 60s to fund the Korean and Vietnamese wars, then by the recessions in the 70s.
Isn't this disgusting? Why doesn't anybody contact the president? Why is he letting this happen to us?
And the 2008 financial crisis.
The housing market collapse created one financial crisis after another, and it often seemed as if the news could only get worse.
Not to mention the massive inflation during the pandemic. Price stability is also another tenet of the Fed's mandate. but they fall short on that promise as well.
100 years ago, in 1913, the Fed was created, and we've marked it with a vertical line there. Consumer prices now are about 30 times higher than they were when the Fed was created in 1913.
Now, all of this makes people wonder, why make promises to stabilize the economy and stabilize pricing when they haven't been keeping those promises? And in all honesty, it's because a system built on credit and debt doesn't call for any stability. The Federal Reserve is essentially another banking system like the Bank of North America or the Bank of USA, lending money to the government at interest. It has three main components. The Board of Governors, with government-appointed positions, has its headquarters in Washington, D.C. 12 regional banks, which offer stock shares, meaning they're privately owned. They act on the policies set by the Fed. And the Federal Open Market Committee, or FOMC. This is a mix of private and government interests. The FOMC is responsible for setting the federal funds rate, which is the interest rate you might hear about on the news. This interest rate determines how much it costs actual banks to borrow money from the Fed, and it also determines the rate at which the money is lent to other entities. To make it more simple, think of the Federal Reserve as having a big lever that they can push up or down to control interest rates. When they push the lever down, it makes borrowing money cheaper by lowering interest rates. This encourages people and businesses to take out loans and spend more. When they push the lever up, it makes borrowing money more expensive by raising interest rates. This helps reduce spending and control inflation when prices are rising too fast. The Fed also makes sure that banks are following rules and have enough money to give their customers when they want to withdraw. To do this, the Fed has 12 regional banks spread across the country. These regional banks work directly with the local banks in their area, lending them money to make sure they can meet customer demands. So, that's awesome, right? In case the banks fail, I know my money is safe because the Federal Reserve will swoop in and save the banks.
Wall Street shaken to its very foundation today.
We will need to stabilize, repair, and reform our banking system and get credit flowing again to families and businesses.
The new president and Congress spent hundreds of billions of dollars to restart the economy, but at the center of the rescue effort was the Federal Reserve.
After the 2008 mortgage crisis, the Fed had to act quickly to save the global economy from tanking. They did this by providing emergency loans to certain companies, some of which were partly responsible for the crisis itself.
That the Federal Reserve has committed nearly $2.3 trillion in taxpayer dollars to deal with the financial crisis. And Mr. President, you have no clue, I have no clue, and nobody in America has any clue where that money went. Who got it? Now, it seems to me that right here on the floor of the Senate, I have been involved in long, heated debates about whether we spend $20 million on this and $30 million on that. These debates go on forever. And yet, when we are prepared to place at risk, through the Fed, $2.3 trillion, hey, I guess the American people don't have a right to know who is getting that money.
Jeffrey Immelt, the CEO of General Electric, served on the New York Fed's board while the Fed provided $16 billion to General Electric. Jamie Dimon, a JP Morgan executive, was on the New York Fed's board while the Fed lent $391 billion to his bank.
And by the way, if you don't think the banks deserve bailouts, Dimon says you're right. And ABC's David Muir is here.
Diane, as you know, Jamie Dimon was lauded for steering JP Morgan through the financial crisis untarnished, but we watched a much different portrait unfold today.
I was dead wrong.
At one point, Dimon saying that risky trade morphed into something else.
What did it morph into? Russian roulette? It morphed into something I can't justify that was just too risky for our company.
A humbling moment for the CEO with humble roots, who'd long been credited with being a master of risk.
This means private financial and corporate interests significantly influence the setting of interest rates, or effectively, the price of money.
The American people, I believe, perceive a conflict of interest when you have, among others, the head of the largest financial institution in America
sitting on the New York Fed, which is presumably supposed to be regulating the Fed, regulating these financial institutions. I think many people, including myself, see this as a situation where the fox is guarding the hen house and that we need real reform in the Fed to make sure that it's representing the middle class and small business of this country rather than just Wall Street and the big money interest.
Bernanke acknowledged the issue, noting that this conflict of interest has been a structural feature of the Fed since its creation.
Because there is a firewall so that the bankers do not have any information or ability to influence supervisory decisions. I'll answer your question, though. The answer to your question is that Congress set this up. We have tried, I think we've made it into something useful and valuable. We do get information from it. But if Congress wants to change it, of course, we will work with you to find alternatives.
The Federal Reserve buys bonds from the government, printing dollars to finance these purchases. Then they deceive us into accepting this newly printed and inflated paper as currency by making its new dollars look like real currency. This is the very essence of counterfeiting. The Great Depression of the 1930s, the Great Inflation of the 1970s, the 2008 recession, and now the 2022 recession were caused in full or in part by the greatest currency fraud operation ever attempted, aided and abetted by this hallowed institution, and built on the broken backs and fractured families of millions of American citizens.
Let's use a real-world example to gain a better understanding of what's actually happening here. A politician, such as a president, is voted into office, and they need money to fund their operations. So the U.S. Treasury, which is the central government, would issue a bond, which is essentially a debt statement that says, loan me $1 trillion and I will pay it back with interest. The Treasury will then hold a bond auction, where big banks buy the bonds and sell them to the Fed, and make a profit from that sale. This bond is then deposited into the Federal Reserve, where the Fed writes a check to the government from an account with a balance of zero. In the Fed's own words, when you or I write a check, there must be sufficient funds in our account to cover the check. But when the Federal Reserve writes a check, there is no bank deposit on which that check is drawn. When the Federal Reserve writes a check, it is creating money, which means there is debt owed on every single dollar in existence. This system took the U.S. from being a global superpower and the largest creditor nation after World War II to the largest debtor nation in the world within a few short decades. And it also means that the only real reserves the Fed has are a bunch of empty promises to repay this debt with interest, in which the interest doesn't exist. But the government doesn't mind because they have cheap borrowed money at their disposal, always. But just imagine the unpayable amount of debt that is owed on every single dollar in existence. There's a reason Thomas Jefferson was quoted saying, "If the American people ever let private banks control the issuance of their currency, first by inflation and then by deflation, the banks and corporations that will grow up around them will deprive the people of all of their property until their children wake up homeless on the land their fathers conquered." So, why would the government allow this to happen besides cheap money? And why would we let this happen?
But worst of all, it is a form of enslavement. Bond is the root word of bondage. Whenever a government issues a bond, it is a promise to make us pay tax in the future. Nobody asked you if you wanted to pay tax today for the prosperity we all enjoyed in the last century. Nobody is asking our children if they want to work hard in the future to pay for the prosperity we're enjoying now.
In the 16th century, the feudal ages, when feudal lords used to own land and used to own their little kind of kingdoms, the peasants would come and they would work on the land in exchange for what? Food, safety, security, and a place to live. But the peasants only worked 150 days out of the year. The rest of the year they had free. They kind of did whatever they wanted. They didn't work during the winter. Why is it that all these free people are working 300 days out of the year and have nothing to show for it except the exact same things that the peasants back in the day had to show for it, which was food, maybe a little bit of security, maybe, and home that you don't even own. So when I tell people, hey, you're a peasant, they're like, no, I'm not a peasant. Okay, you're worse than a peasant. You're a fiat slave because you're working and running around in that rat race that was constructed, right, to keep you subjugated and controlled. Because the people, well, whether it's the bankers or the people that kind of control the narrative, and it's not just one individual, it's thousands and thousands and thousands of people and lineages and dynasties and that understand how to control individuals, realize that it's a lot better and easier to have a slave work for you under the premise that they're free and that they're working for themselves than to whip them into submission, because it's not ROI positive to whip your slave into submission, to demoralize him, to make him weak. No. You want the cow to produce a lot of milk, so you got to keep pumping it.
The simplest way to understand this is as follows. The government mainly receives money in 3 different ways: borrowing, printing, and taxes. Borrowing entails an institution other than the Fed buying government bonds. For example, a bank in Japan decided to buy a treasury bond worth $10 million. The government doesn't really like this as much because now they have an obligation to pay back the debt and interest, which takes prosperity from them in the long run. Printing, like the bond buying process we previously described, is where the government sells a bond to the Fed and creates money out of thin air. This also isn't the most beneficial for the Fed and the government because printing shouldn't be overdone. If they create too much currency, the currency eventually loses its value. So that leaves them with their last option. Ironically, the one that became the impetus for the Revolutionary War: taxation. Income tax allows the government to keep more money because it doesn't have to be paid back to the taxpayer. Effectively, this is slavery. Chains and whips are replaced by the power to create unlimited amounts of currency instantly. An object that people are willing to lie, cheat, steal, fight, kill, and start wars for. This system ensures a steady flow of money to the government, while keeping the public in a constant state of financial dependency. The more the government spends, the more it needs to tax. The more it taxes, the less financial freedom individuals have. Not to mention the loss of purchasing power because of inflation.
So this year in 2024, I want you to take a look. The US federal government will spend more money on interest payments than national defense. $892 billion in interest payments and $849 billion for defense. Next year, the government will spend more money on interest payments than on Medicare. As the government goes deeper into debt, a larger percentage of their budget will need to be spent on interest payments. You could just think of it like a person in credit card debt that keeps going deeper and deeper into debt. And the interest payments just get bigger and bigger. And then it gets to a point where they just can't keep up with the payments. And that's where our government is headed. And listen, I want to show you this. This is why I feel like we've passed the point of no return and it's hopeless. Every year for the past 20 years, the federal government has been overspending. The most recent bar is for fiscal year 2023, and that's a $1.7 trillion deficit. For 2024, this year, it's going to go up to $1.9 trillion.
The Federal Reserve and the income tax system work hand in hand to ensure the government's financial needs are met, regardless of economic impact on ordinary citizens. This power dynamic keeps the populace in check, ensuring our compliance and perpetuating the cycle of debt and taxation.
I don't care if you're a Republican or a Democrat, here's the problem. George Bush created a record deficit and he added a record amount of national debt. Obama comes into office, he outdid Bush. Obama added a record amount of national debt to our country. Trump comes into office, he outdid Obama. Trump created record deficits and added a record amount of national debt. Biden is on track to outdo Trump. The Committee for a Responsible Federal Budget wrote this. Over the past 8 months of the fiscal year, we've spent more on interest payments on the debt than we have on national defense. We are already spending more on interest than we do on all federal spending for children, and we will see interest grow larger than Medicare spending this year.
Adam Smith, a political economist, is quoted saying, "The problem with fiat money is that it rewards the minority that can handle money, but it fools the generation that has worked and saved money."
This isn't a debate. At this point in our history, it's really no longer even a discussion. Decade after decade, the Federal Reserve has repeated the same cycle of corruption and destroyed our economy in the process. Madam Speaker, former President Garfield was right when he said whoever controls the volume of currency and money in any country is absolute master of all industry and commerce. To the American people, I say that your master is not decided at the ballot box. It's not decided in public debate or open dialogue. You didn't vote for the person who controls your life. They would never let you. Your master is the machine of federal finance that, in the name of quantitative easing, stripped your right to property ownership away from you, turned your existence into a groveling attempt just to get by, and sucked every last drop of autonomy from the shriveled husk of what used to be a vibrant and prosperous nation. You didn't vote for the chair of the Federal Reserve. You didn't vote for 9% inflation. But you can absolutely vote for people who are willing to destroy it and give the power back to the people.